How you guys doing? In this particular video, I'm going to be talking about order block crypto trading strategy. I'm going to be showing you what order blocks are, how the characteristics they have, and how to find them on price charts. You see, if you check through order blocks tutorials on YouTube, you discover that most of them are very complicated and they leave you even more confused than you were. So if you're someone who knew about other blogs before, when you watch some of their tutorials, you get confused. If you're someone who maybe heard about other blogs from someone and you decide to implement it in your trading or integrate it into your trading, you will discover that after watching many of the YouTube videos, you get confused. As in, you don't even know how to apply it. You don't know what to do after watching the video. It's as if you just didn't learn anything. But in this particular video, I'm going to be showing you, teaching you other blogs in a very simplified manner, very easy, and you would be able to start using it immediately after this video. So if you're ready, let's get started. So first of all, what is an order block? Another block is a price level or zone where most institutional traders and big money players likely place their trades to enter or exit the market. It often represents future areas of support and resistance. So an area where most institutional traders and big money players like whales place their orders, like it's kind of zones that they place orders, because they don't want to execute all of their trades at one go. Okay, let me give you a physical real life example of an order block. Let's say you go to Walmart and you want to buy something and they tell you it's $5, and you go to Amazon tells you it's $5, and maybe Costco tells you it's also $5. That's an order block, as in a price level where most people are either willing to buy or to sell. There are two types of order blocks. You have bullish order blocks and you have bearish order blocks. So we'll talk about more about it later. But the next is just the characteristics of order blocks. And this is important so that you know the kind of psychology behind them. The first one is they are often found at even numbers and psychological areas. Take for instance something like BTC. BTC, most of its other blocks are in psychological areas, like something like 10K, 15K, um, 20K, 25K. Those are psychological areas. And also, you also find many of the other blocks in even numbers. You have things like 10K, 12K, 14K, 16K. So those are kind of areas you're most likely going to find other blocks, because most institutional traders they like round numbers. They like to trade with round numbers. So often you find other blocks at those regions. Then another characteristics of other blocks is price reacts sharply when it enters or exits an order block. You will see that there is often a sharp reaction of price, because for a bullish order block, because a lot of people are buying, a lot of institutions are buying, and there's a lot of activity in that region. While for a bearish order block, lots of people are selling, so it tends to have a sharp price reaction. The next is an order block price level often has a historical sentiment. Take for instance something like when BTC got to 69K, that particular place had a lot of other blocks because a lot of people wanted to sell off. You could call it resistance, but it's not really resistance, because a lot of people were very inclined to sell off their BTC at 69K. Why? Because it has a historical sentiment of, oh, this was the last place it ever got to. So a lot of people were keeping their sell orders at that level. So that constituted an order block. Then the next characteristics is there is often volume spike when price enters an order block. You'd notice that when price enters the order block area, there is often time a volume spike. that when the trend is reversing, you will see it in the chart when I'm explaining it in the chart. There is often a volume spike either to the upside or to the downside, but you will see some other criteria you use in identifying other blocks. Then there's often a retest of the other block price level before trend continuation. Oftentimes you would see that the other block price level is often retested before the trend will continue. Then how to identify other blocks on charts. A bullish order block is usually the last red candle before a sequence of up candles. A bullish order block is usually the last red candle before a sequence of up candles. Then a bearish order block is usually the last green candle before a sequence of down candles. The last candles most times has a low volume, which signifies that either the bulls or the bears are beginning to lose steam. So I will show you in the chart. This is the chart. Let me show you. It's very easy to identify. It's just a whole lot of traders that are making it complicated and complex. It's not complex, it's not difficult. They just make it look very complicated, maybe because they want you to pay for something, but it's not difficult. So if you look at this particular chart, you would be able to easily identify the order block here, and it's this candle, this very candle, this candle. Let me let me um let me identify it here. Order block. So you see that candle, because it's the last red candle before a series of up candles, the last red candle before a series of up candles, and oftentimes it has a low volume, a low selling volume, because the bears are beginning to lose steam. So often you would notice that the trend is about to reverse because it comes with a low volume, because the people who are pushing the markets are losing steam. So for a bullish order block, it's the last red candle before a series of up candles, and it is most times accompanied by low volume. So that's how you use in identifying it. Order block, according to this presentation here, a bearish order block is usually the last green candle before a sequence of down candles. So that's quite easy to identify. Let's look at this area. This is a bearish order block. It's very easy to identify. Why? Because after this particular green candle, the next you see is a series of red candles. That's it. It's not difficult. You could find out that it's not difficult. And just like the bullish order block, the bearish order block most times is also accompanied with low volume, like low buying power. Then it just shows that the bulls are beginning to lose steam. Then the next you see is the bears take over the market. So that's it. It's very easy to identify. So but to make it very easy for you, I will show you an indicator you can use. It's called Order Block Finder Experimental by Wu Gang Lo. So all you have to do is just click it, and it will identify all the other blocks areas for you. You see, this is another block. This is also another block which we identified. This is another other block that we just identified just now. So that's it. As in, it shows you all the places that there is other blocks, whether bullish or bearish. As in, just keep that definition in mind. So how does this help you? Other blocks could signify areas of potential resistance and support, as in terms of the future. So like this is I'm recording this July 2nd, and you could see that BTC is going down. It's currently at 61,953. So we could expect it to be at this, to come at this point, to get to this place as a support area. So you would also need to ensure that you validate other blocks with other indicators like RSI divergence, MACD divergence, and other indicators you might be using before. So I know most people watching this video likely already have a setup, or they already have something they're using before. They just want to add the other blocks concept to their trading. So that's how you to identify other blocks. Very simple, very easy. It's not as complicated as you watch in other YouTube videos.